Please put your hands together for this amazing panel.
Thank you. All right, fantastic. Tokenizing the real economy. It's been, I think, 10 years that we've been talking about this subject, so I'm looking forward to being able to bring a little bit touch of spice, hopefully, to it, because I remember we were talking about security tokens, asset reference tokens, RWAs. There's a lot of acronyms. Hopefully, we can get to it now with all the financial institutions in the room and those that we have here on this panel. And I'm sure probably the audience is also wondering, there's some big names and titles as well here on stage. What do they actually have to do with tokenization? So maybe we can kick off and you just individually introduce yourself quickly and maybe what you have to do with tokenization and your firm, what maybe your firm is doing.
My name is Ekaterina Emelianova. I'm a CFO and Deputy CEO of TradeXBank. We are a small boutique bank based in Switzerland. Surprisingly, being a Swiss bank, we have no individual clients. We work only with corporates, and our key business and our DNA is commodity trade finance. So we finance physical flows, of starting from energy product, finishing with fertilizers and grain. And you know, our business is very traditional, let's put it this way. It's really physical flows moving, and we also see the digital part. And today, I think we're more in a stage we're trying to understand how to make the business case, if there is a business case for our clients. Because we heard a lot today about stable coin and the payment. I think this is out of question. That's the case is there, especially for cross-border payments. But how to do with the token and how you can make it together with a real flow which is coming. The panel before was mentioning how to find the right balance, because at the end of the day, you keep the token in your hand, that is on blockchain, everything is fine. But in order to produce something, you still need the physical to arrive. So we are more in trying to see what would be the future and to make sure that we are not late in this journey.
Thank you.
Thank you, Ekaterina. My name is Konstantin Kraiss. I'm a managing director with LynxCap Investments, an investment firm, Swiss investment firm based in Zug, with multiple offices across Europe, and who has significant experience in investing across debt instruments, and we are acquiring debt in Europe for years now, for decades. And it came so that one of our financing sources is, usual funding through listed bonds, which we have on the Luxembourg Stock Exchange. And with the development of RWA market, we decided, why don't we bring something that is already known to the market, we tokenize it, and we kind of take out the volatility out of some of the portfolios of crypto portfolios of investors that are heavily invested into crypto assets, which are largely volatile. What we offer is something of a stable return over a period of time. And yeah, it's been a journey for us, and we are happy to share the insights into what we've done and what's been difficult and what's been amazing, and what are the benefits ultimately for the industry in developing the RWAs.
Thank you.
Hello everyone, I'm Maxime, head of product at SICPA. For those who don't know SICPA, we're definitely not a financial institution. Basically, you all have one of our products into your wallet, since we are producing mostly 90% of banknotes. I mean, if you have a digital wallet, yes, we don't have one of our product, obviously.
Yet.
Yet. And thanks for the transition. And why does SICPA have insight on tokenization? Basically, our job and our mission is to help government or central banks to, let's say, monitor their assets, either in the digital or in the physical realm. And that's where we come from, because at one point, the physical world meets the digital one, means tokenization. Tokenization is something that happened since the beginning of computer. Let's say we are not talking about blockchain then, but now, and that's why we're here today, since we can now link these capabilities of, let's say, fractionalizing, sorry for the new word, but we can now fractionalize this kind of assets, and so now we can open to market and financial market especially. That's where we, as SICPA, we could add that trust, because we, basically our trademark is pulse of sovereignty and creator of trust.
Great, thank you, Maxime. So I did mention that I wanted to kind of add a little bit of a spice as well to the panel, and somebody actually told me earlier today that they believe that tokenization doesn't create value, it reorganizes trust, which maybe is a bit ironic because you could consider that trust in today's society has value with everything that's going on in the world. So I want to be able to understand here if tokenization actually improves how real assets are financed, verified and traded, or if it's just digitalizing existing efficiencies. And maybe here we start with yourself, Ekaterina, from a trade finance perspective. So what would make a Zurich-based bank comfortable financing a tokenized commodity position?
Well, I think being a finance person, I will reply now like a lawyer, because it's lawyers who always say it depends. But overall, we all know that in a commodity trading world, there is a lot of frauds, which usually happen with the fact that something happened with the product. So from that standpoint of view, if we can get, and there are a lot of fraud case which is done through the documentation, which follows the product, like bill of lading, warehouse receipts, etc. So if we're gonna get something which gives us more comfort, so of course, from the bank perspective, it means that our risk is lower, and that means that we would be able to finance it. But that's not tokenization of the physical. And this is a big difference. So we see a lot of cases which relates to the documents which accommodate the flow, but the question is what we do with the physical. And with the physical, from the blockchain technology, what banks was looking for several years already, is that if you look to the grain, the quality of the grain heavily depends on the temperature, on the how dry was the storage, etc. And actually, if you have some kind of the token inside there or some blockchain technology which is giving you this information, so actually you can see the quality. And that also should improve. Once again, this is not tokenization of the physical flow itself. It's something around that. So from that standpoint of view, what we're trying to find as a bank, we're trying to find the business case, because gold is much more easier. It was discussed earlier today. I think with gold, we're kind of used to have this physical allocated, unallocated gold, but with the commodities, I think it's still the question. So what I would say that we definitely would be more willing to finance than we can be sure that we have less risk. And today, this is more about documents which assign the product and the quality of the product. But we're trying to understand what's going to be the future, and like in 5 years' time, how this business case may evolve. And from that standpoint of view, it's quite interesting to listen for the colleagues, because, you know, banks, due to our regulations, we're unfortunately too much conservative, and maybe we're just missing this case which is in front of us.
Thank you. Thanks, Ekaterina. And let's double-click on something that you said, because I think that tokenization assumes the digital representation that's reflected in the physical asset. However, it's not always the case. So maybe, Maxime, to yourself, how do you prevent the token from becoming detached from the physical entity or asset that you're tokenizing?
Yeah, interesting question. I mean, you obviously can. There are like multiple tokens on the market right now that doesn't represent anything. I mean, I mean, there are rumors. There have been rumors that, let's take for example that some asset-backed token where the gold has not been barred. So you definitely can. So how can we prevent that? That's something that we do, but there is also some actors on the market that do this also. Basically, you have to, and it all comes down to reputation. You have to partner with, meaning the physical part of this trust. I mean, I love that example about grain condition, because basically you want to have the proper actors that know how to measure that and be able to trust that. So to answer your question, let's say an high-level overview, basically you have to find someone who is reliable and as, let's say, you know, an oracle thing, but an oracle in real life.
Yeah.
You have to trust that someone. I mean, it has to be his business to say if it goes wrong, that's, I mean, you don't have any interest of that going wrong. But that's where we are building this, let's say, initial trust foundation to say, okay, you want to do this token. I partner with all the right, let's say, mineral surveyors, mining companies that knows exactly what to do. So you can invest in that token and it represents a real value in real life.
So if the verification layer fails, does tokenization then amplify the risk?
Well, I don't think there is a clear linear correlation between the two. For me, tokenization is not about, does not improve necessarily liquidity. It does improve accessibility. Meaning, if we take the example of gold, or since we are in the Kunsthaus art, you can give access to multiple investors, like retail investors, to something that formerly they cannot invest in, like ingots or real estate, for that matter. So it does amplify that because it does have multiple societal repercussions that formerly were only, let's say, enclosed in the private company or private family office or banks. So now it's in the market, open to everyone. So yes, it does quite a bit amplify that, but not in a financial way.
Okay, so accessibility rather than liquidity. I mean, Konstantin, what are your thoughts? Because liquidity is a big play for you, I guess.
It is, but I would agree with Maxime here that accessibility is much more important. And continuing on what Ekaterina was presenting and building on that, and your question, in my understanding, what do institutions require is actually minimizing their underwriting risk in terms of the instruments they invest into. How do they make sure that whatever they onboard is legit, there is the proper custodian in place, what happens if something goes wrong, what's the timing to cash or to money to realize the underlying real world asset if something breaks in the chain. And we've been always focused on that. I think in realizing our product, we spend 50% working on the IT side and 50% working with lawyers, regulators, trying to understand how do we deliver the project, the product that is already like a TradeFi product, right? It's a bond. We already have a cash agent. We have a calculation agent. We have basically a third party that would manage the process if we fail to deliver on payments. On top of that, we have been adding additional level of security for the token. So every token is actually represented by an ISIN of the bond that is there. So it's basically the same terms and conditions. It's just an access point for institutions that didn't have that access point before and probably are not really willing to convert their, say, stable coins into fiat money, invest fiat money into bonds. They want to stay in the crypto basically world, and it's actually cheaper for them to do that. It's faster for settlements. Accessibility is easier. So on that point, we are not losing on oversight, but we are providing additional benefits to a traditional, or let's put it this way, it's an alternative to a traditional, financing instrument. And I think the whole crypto universe is about that.
I see. And so poking the bear a little bit here, I mean, so are we building infrastructure for real demand, or are we hoping that demand will appear once the infrastructure is there? And maybe this kind of cross-panel.
We haven't seen the demand from the commodity traders yet. We saw that some of them considering stablecoin as a mean of payment, but we haven't seen the request from their side. And I honestly believe that most probably it wouldn't be commodity traders who will come with the demand, because for them, I think they like this kind of physical world, which gives them opportunity for arbitration. But I believe that for the banks, for insurance company, for the logistics, and for the warehouse, if the infrastructure players will start to say, okay, guys, if you want to stay in a physical world, that will cost you more, and it would be like this. And if you move to the digital, because we believe our risk is lower, so that may be how the market will move.
Interesting.
But at this point of time, I would say it's more for the banks who is afraid of losing their money with the physical risk associated, and having to see like what it might be. One thing which I like today, then I was listening to other panels, was in the commodity world, quite often banks will require our traders to hedge their risk. So they physically do certain derivatives trade to hedge the price of the commodity. And we all know how it works in the classical world. So what we can see today is that at least this part of hedging will already bring us closer to the digital world. And then most probably the physical part will follow. And another thing I would say, for me, it's absolutely clear that I don't see that the banks and the crypto players should be against each other and we're like trying to compete. I think that it's a win-win story. Then the classical banks who are regulated, who is trusted because of the fact that they are regulated, and who already has all this classical financial setup and the rails, will partner with the crypto players, and together we would be able to offer much better product proposition for our clients, and we will still have a place for generating funds, both banks and the crypto players.
Yeah, if I might add to that, there are definitely some interest, let's not say demand, clear demand, but some interest from government and central banks, but not for the, let's say, the quickness and the rapidity of the infrastructure, much more for the programmability part. We've been focused on Western economies a lot. But when you look at African countries and Southeast Asian countries, there is a thing that often we forget, like Islamic law. Basically, and that's all have to do with the real world assets, in this principle, whether you agree or not, they have to be, each financial operation has to be tied to a real world thing. So basically, that's what tokenization answers to. If you want to take a loan, you have to buy a house to be backed by a real house, etc. So for them, and especially for that part, that's a very, let's say, huge use case for them, so they can ensure that, yes, it is not just paper-based, it's actual based with a token representing the actual asset and the actual underlying asset.
Yeah, thank you. Konstantin, would you like to comment on that, or?
Yeah, I think it's a bit, chicken and egg problem as always. But again, just commenting from the experience that we had, and we were the ones that actually in our firm we decide, well, when crypto market has been growing, and it was 3-4 years ago when we approached certain banks, even that we're presenting today, and we've approached certain platforms, and with the idea of tokenizing the bond, bringing it to the broader audience, they said, nah, there is no demand for this product. There is, basically, we don't want to invest into that. So we said, okay, the market is not ready. approximately 2 years ago, we were contacted by the platforms. We were the ones that received calls, and we were asked, hey, remember we talked about 2 years ago. Now, it seems we have clients that are actually willing to build portfolios that are not all Bitcoin or Ethereum that fluctuate like 50% on a monthly basis. They want to have something, a real world, that you can actually assign a value to, in a way, like taking your cash flow, discounting it back, knowing what it's worth, and comparing it, and you know, building part of your portfolio based on these type of assets. And this has come from Switzerland. We partnered here with U-Hodler, who's been a great help for us in promoting, marketing the product here in Switzerland and in Europe, and we've attracted clients this way or investors this way. We have been reached by the exchanges in Asia, in United Arab Emirates, who basically came to us and said, we need something like that. So yes, there is demand. I think, of course, it's not demand like, you know, it's going to be bigger, it's going to grow, and we need to help to develop these products to be basically investment grade, and for this demand to grow further, and you know, with accessibility also growing the liquidity.
Yeah, no, thank you for that. And I come back to what you mentioned at the very beginning of what you were saying, that it is a little bit of a chicken and the egg, right? And Ekaterina mentioned kind of this whole ethos around, well, the banks and the crypto folk should come together, whereas maybe, you know, a decade ago it was, you know, let's break the wheel, you know, change the system, and it's maybe not the case anymore. Please, yeah.
Yeah, Ahmed, I think I have this thought that bugs me, and I apologize, I'll probably offend most of the people in this room now, including myself. But just looking at the social media platforms, you know, we had Facebook, then we had Instagram, then now we have TikTok, and I'm looking at my son, who is 17 now. He's all about TikTok. He doesn't know what Facebook is, and he follows this new trend, and I think RWAs and the whole crypto is not for, you know, people in this room. Yes, we're going to facilitate the development of it, but it's for the generation that is actually graduating now in the universities now. That, you know, you go to Asia, and I've seen so many people involved in that industry, young people that, you know, they don't dress like us. They all wear T-shirts and shorts, and it's a completely different kind. But I think the interest is there, major interest, and there is a shift in the whole structure of the economic or finance world, a development, not a revolution, a development, a normal development. And we are, you know, helping it happen. We are here to foster it, and
yeah. No, I understand. I'm wearing sneakers. I'm trying to stay up with the times, at least a little bit.
Yeah, I've seen those. Very nice ones.
And so look, we have 4 minutes left, and I had a different kind of concluding question, but maybe let's stay on the same thought that you had, right? I was actually speaking to someone before that we had the same thought actually as you, is that actually it's a generational change. It's much harder for people to understand how the internet or certain digital assets are going to be used, because, you know, if you didn't grow up with the internet or kind of a smartphone, and you've not been able to use it as, let's say, an inherent native of it, it's very hard for you maybe to see behind that screen. And so, let's say, the ageism to a certain extent is a prominent factor. So, you know, the people in this room are here in this room because they do want to make a change, or they do want to do something. What could you recommend to the audience here that maybe not be the users or the end game users, if we look at a couple of decades beyond digital assets, but what can they do today in this room or outside their room tomorrow when they go back to work in their offices to make a change for the future generations with regards to this industry? What can be done today for tomorrow? So maybe, a quick minute each, and then we wrap up.
Very quick. I think it's a perfect momentum. Let's say I said I'm working in a boring bank with a commodity trade finance. So we know that sometimes then things are not easy and volatile. People want to go to the roots. And people may say, okay, I want to earn some physical, which I believe, and it might be not only oil, there is a metal in place, there are other things. So today, being the individual, you can't invest into that, and most probably young generation who gonna get, as we heard already, a heritage from the elder one, maybe they will get advice from the elder parents saying like, okay, what about physical, what about oil, what about metal, and you can't do it. But if we tokenize that, we're actually giving them opportunity, and we're saying, okay, we still will need to have a physical world, we still want to invest into that, we don't know how to do it. So let's try to make tokenize, and you may have it like fraction, which you can't afford. So what I'm trying to say, like if we all try to see how we can bring what we have today forward to this digital, and maybe start small thing, because I think one of the problem was that we were trying to jump from old world to the new world, and that's why maybe sometimes it doesn't work. Why not to try to build up the bridge? So all of us today returning back to our office tomorrow, and if we start to build up the bridge all together, step by step, that will bring us to the bright future, I believe.
Wonderful, thank you. Maxime?
Yeah. Thanks for the question about that. But I think it all comes down to accessibility. When you have young people, I'm wondering, I am part of the old or the new guard, but anyway, there is nothing much more frightening than saying it's a crypto-based token wrapped into a blockchain settled by stablecoin. Nobody understands that. Except from people in this room. And I think to bridge that gap, it's not only to bridge that gap to new generation, but also to bridge that gap to, let's say, less financial literary people. And from doing that, and we can do that right now with our actual clients, I think we can lay a proper foundation for tomorrow's growth.
Thank you. Yeah, using a digital asset like a nice banknote that we all have in our wallets. Did you want to say?
I would appreciate this is kind of humble ask to the banks, and some of them were presenting today again. And when you go to the webpage of the bank, as an individual, one of the claims was there are the deposits, the crypto deposits are not, there is no demand for them. Actually, when you go to the banks, most of the Swiss banks, you can't find it in the product offering. If there is no offer, then of course there is no, active demand. We have to build it. We have to build the infrastructure, but we have to also promote, explain, and make this crypto universe more accessible, and including the RWA products more accessible to the market, to the potential investors.
Fantastic. Building the bridges of tomorrow through tokenization. Thank you all for listening.